Well, a very good afternoon, ladies and gentlemen, and welcome to the 2023 Brighter Super Annual Members Meeting. I'm Tim Cox. I'm your MC for today's proceedings, and people who've just joined us online can hear the City Hall bells above the Brisbane Room here at City Hall in Brisbane. Before we commence, I'd like to acknowledge the traditional owners of the land that we meet on today and pay my respects to elders past and present. And we acknowledge and celebrate the continuation of a living culture that has a unique role in this region. A quick look at the agenda for today's meeting. First of all, we'll have a message from the Chair, John Smith, and then from the CEO, Kate Farrar, and then we'll hear from the CIO, Mark Ryder, and then, of course, a question and answer session. Following the Q&A, if you are interested, we have staff on hand to offer super health checks, as well as members of our advice team and executive leadership team to help you with any questions at all you may have. We're also delighted today to have representatives from both Zurich and TAL Insurance, and one of our valued partners is also with us here in the Brisbane Room, Mates in Energy. So please do take an opportunity to drop by and speak with Jamie about the vital work that Mates is doing, supporting the energy industry regarding suicide prevention and mental health. In terms of housekeeping for the questions and answer session, the Q&A session at the end of the presentations this afternoon, for those of you here in the room who have a question, please raise your hand and one of our staff will run a microphone to you. Now, if there's any walking, do please let us know. We're counting on running for these questions today. They'll get the microphone to you. You'll then be able to ask your question and I'll address it to the most appropriate speaker here on stage to respond. In the interests of making the most efficient use possible of your time, we'll only be taking pre-submitted questions and questions from the floor. And for those joining online, please feel free to submit questions via the live webinar feed. Just press the button that says Live Q&A, and one of our team will personally respond to your question in coming weeks, so you'll get a personal response to your question. We've tried to incorporate some of the pre-submitted questions into today's presentations, and if you did submit a question prior to today's annual members meeting, whether you were attending in person or online, and we don't get to it today, rest assured we will come back to you with an answer in the coming weeks. Now, before I hand over to our presenters, it's important to understand that the information and examples contained in the presentation today are general in nature and have been prepared without considering your individual objectives, financial situations or needs. It's important when making decisions about your super options that you obtain the relevant product disclosure statement and consider your own personal circumstances. Should you need help with your personal circumstances, we have a team of financial advisors able to work with you to make recommendations on how to manage your superannuation, your investments and your insurance. And without further ado, I'd like to hand you over to the first speaker for today's annual members meeting, the Chair of the Brighter Super Board. Would you please join me in welcoming John Smith? That's not moving at all. Why isn't that moving? Let me get that sorted for you, John. There we go.
Perfect. Thanks, Tim. Good afternoon, Brighter Super members and guests. My name's John Smith. I'm Chair of the Brighter Super Group. And on behalf of the Board of Directors, I'd like to welcome you to the 2023 Annual Members Meeting. Over the past 12 months, the Board and Executive have been focused on finalising the merger between LGIA Super and Energy Super, which we started in 2021. And also transitioning Suncorp SPSL members into Brighter Super effective 1st of June 2023. We are now a strong fund with over 250,000 members and more than 30 billion in funds under management. And that's at 30 June 2023. We've undertaken significant work over the last financial year to improve cost efficiencies, investment opportunities, and we're proud to have delivered fantastic returns to you, our members. So the last financial year actually marked the 30th anniversary of compulsory super in Australia, the Super Guarantee. And if you're old enough like I am to remember when it first started, it was 3% of wages or salary back then. By the 1st of July this year, it's now 11% of salary or wages. And on the 1st July 2024, it goes to 11.5% of salary or wages. So that's great news for working accumulation members who will be building towards a more sustainable and comfortable retirement. With the maturing of the super industry, we've seen a lot of consolidation, and Brighter Super has certainly been part of that. We've completed a merger and an acquisition over the last couple of years. Our aim is to improve our services to you, our efficiency through lower fees, better returns, and greater opportunities to manage and invest your money. There are some predictions that suggest there might be 50 or fewer super funds in a few years. That's a stark move from today where there are over 500 Australian super funds. There have been some changes in government legislation, and there always are for super. In February, we had the Quality Advice Review that Treasury released, but the recommendations were to improve the access to affordable advice. Far too many of our members are currently missing out on getting advice that could make a significant difference to their retirement. This year, we've invested in and developed a strong advice team with a plan to work with the independent advisor community to provide a range of advice for you, our members, from general advice through to comprehensive personal advice. There were 2 federal budgets this year, with minimal changes to super, thankfully. However, the government did expand the eligibility for the downsizer contributions by lowering the minimum eligible age. This means you could sell your home and add up to $300,000 per member to your super account from age 55. Now, that age used to be 60. So that provides more flexibility to you to contribute to super and potentially help you fund a comfortable retirement. Another announcement that received considerable media coverage in May was the government's proposal to increase the tax on super from 15% to 30% on balances over $3 million. And that was aligned with the focus on making sure super is used for its intended purpose. Payday super was also announced, with super paid on the same day as your wages or salary, and that'll apply from the 1st July 2026. This means your superannuation payments hit your account earlier and therefore invested earlier. As I mentioned earlier, it was a year where we finalised the merger and acquisition activity we started in 2001, bringing together LGIA Super, Energy Super and Suncorp Super SPSL members, all onto one administration platform. So the fund has transformed from a fund of around 72,500 members and just over $15 billion in assets to one with 250,000 members today and more than 30 billion in funds under management. And that's created multiple efficiencies of scale that's allowed us to deliver lower fees for many members. It has been a big change though, and we do thank you for your patience through that time. We have no immediate plans for any mergers or acquisitions. We're now focusing on streamlining our investment portfolio and improving our service to members through our digital and personal contact platforms. So we're now a strong mid-sized super fund, one of the top performing Queensland industry funds. We're very happy with that positioning, but always we'll strive to be boutique, better and brighter for our members. During the past year, the mergers have also resulted in a reshaping of the board. As part of the merger between LGIA Super and Energy Super, we had a combined board of 15 members. By the 1st of June this year, that had reduced to 10 members, in line with our strategy for a more streamlined and efficient fund for our members and employers. We have equal member and employer representatives from energy, local government industries, and now also from the retail sector. Energy industry veteran Peter Scott joined the board with extensive experience working in Queensland state-owned and local government organisations. However, following Peter's appointment as Chief Executive Officer of Energy Queensland in September 2023, and congratulations, Peter, Peter resigned from the Brighter Super Board, and we are currently in the process of selecting a replacement member representative director, and that candidate will be appointed on the 6th of February 2024. Jennifer Thomas from the Services Union continues to serve you on the board, and Micheline Colopy, Henry Capra joined the Brighter Super Board, bringing knowledge and insights on the needs of former Suncorp and retail members. I really have enjoyed working with the board members, and we are energised and excited to support the executive team in delivering a brighter future for you, our members. A real highlight of the year was the Brighter Super's default My Super option return 10.62% for the 12 months to 30 June 2023. Coming fifth nationally in the Super Ratings SR50 My Super rankings for the year. This made Brighter Super Queensland's top performing industry super fund for the My Super option. In fact, 10 Brighter Super accumulation options, including the default My Super option, and 7 pension options were in Super Ratings' top 5 best performing investment options for their respective categories in 2023. And we're continuing to ensure our portfolio and risk posture are relevant for our members to maximise investment returns. Now, you quite rightly will be asking, how's that performance now? It's been a slower start for this financial year. Returns for the industry generally are lower, and we continue to operate in very volatile times, managing inflation, cost of living pressures, and the impact of the wars in Europe and the Middle East. Mark Ryder, our Chief Investment Officer, will update you on the fund's performance in these challenging times and give his outlook for the financial year. So this year will be a year of focusing on you, our members, ensuring you receive the benefits of the fund growth, such as lower fees, a more diversified investment portfolio, but we will not lose sight of that focus on personal service to support you. I want to thank the CEO, management team, and all staff for the performance this year. It is truly exceptional. So please now welcome Brighter Super's CEO, Kate Farrar.
Hello, and I am really delighted to be talking to you all again. I do have to say that these events are pretty much the highlight of my year. It's fantastic to be able to talk to you all face to face, see you online, and give you assurances that your money is in good hands with us. So John has covered the merger growth, and Mark will go into more details on the investment performance next. So I'm going to talk about what we've been doing behind the scenes to deliver better products, services, and experiences to our members. First of all, I would like to introduce the executive management team, many of whom are here today, who've all been working incredibly hard for you over the past year. It's a really great team of leaders who they themselves lead over 200 amazing, hardworking people to deliver for you. During the last financial year, we have worked pretty hard to strengthen our teams across the business, and we've had minimal change in the executive leadership team, which has led to much needed stability through this period of great growth. Just after the end of the financial year, Hamish McKellar, our former General Counsel and Company Secretary, left the business, ably replaced by Brian, who's here taking the minutes for us. And we also appointed a Chief People Officer to our team to make sure that we're not only really great for you, our members, but also a fantastic place to work. Each year, the team operates according to our strategic plan, which we developed together, to achieve targets in our key performance areas. For financial year 2023, I'm very happy to report that every single area, bar one, achieved target in our delivery to you. The one area that we did not achieve our target was for members recommending us in terms of our service. So just as John has, I do also want to acknowledge the disruption that you experienced over the past year and that it was higher than any previous year. We do apologise for that inconvenience. For the next financial year, we're placing a really special emphasis on member service uplift, listening to where we can improve for you, and I will talk more about that soon. Our values of trust, integrity and partnership do continue to guide our delivery, and I thank everyone in the team, just as John does, for all of their continued hard work and commitment to you, our members. Our promise is to be right by your side, and in between the merger projects, we have been out and about. And you can see on this slide just how many members we've visited in cities and regional towns and through workplaces. And where we could not come to you, we've been available through the email or over the phone. We really believe, as John said, in the importance of human connections, but this isn't always possible, so our digital platforms have been and will continue to be upgraded to provide an easy way for you to access the information and the support that you need when you need it. We are adding more functionality to the website's member online portal and to the app. From early 2024, Member Online will allow you to generate interim benefit statements and access account dashboards, obtain insurance quotes, make applications, and submit claims. Member Online will become the best place for you to go for information at any time, rather than having to call within standard office hours. We really do encourage everybody to get online and download our app. It's very easy to use and to get used to. We've also added digital platforms for employers and for the independent financial advisor community. Our technology team will progressively continue to deliver enhancements over the coming years. To provide more support to members, we launched an education webinar series in 2022. This received really great feedback as the webinars offer bite-sized insights on actions and strategies to consider when you're planning for your retirement. We do intend to keep doing those and also to expand the topics for different members and needs. You can register for any of our webinars either through the app or on our website. I can really assure you that member service is a major area of focus for us now, going forward, and our Chief Operations Officer James and Chief Member Officer Lisa, both of whom are here today, are on a mission to make your experience with us even better. A good thing about mergers is that they create the opportunity to select the best practices, tools and systems from the foundation funds and apply them to the entire business. So I'm going to talk to you a little bit about some of the benefits that we have been able to introduce through that process over the past year. First of all, changes to our advice offerings. Some of you here today would already have benefited from financial advice around preparing for and enjoying a comfortable retirement, and hopefully appreciate the value that good advice can provide. For others, you may not have sought out financial advice yet for your retirement planning. Perhaps you were worried about the cost, or perhaps you felt that you had too little invested, or that you'd prefer a DIY approach. We do know through research, though, that an advised member can significantly improve retirement outcomes. If you don't already have an advisor, you'll be pleased to know that we have expanded our internal advice team to provide general and comprehensive advice to you. Some services are included in your annual administration fee, like, for example, single issue advice, where members can receive advice on a single issue related to super at no additional cost. More comprehensive advice relating to super can also potentially be paid out of your super account, so you won't have to find any additional cash. If this is of interest to you, we have lots of the team around the room today, and please get in touch with us if you would like to get some advice on your own personal situation. If you already have an independent external advisor, you can register them with us now and use their services in the same way. So more than 1,000 external financial advisors already work with us, and 500 of them are registered with us on our new advisor portal. We are committed to providing more advice to more members in the coming year and to becoming known for the quality of our advice offerings. As I said, some of our financial advisors are here with us today. If you'd like to chat, please do take the opportunity. So, investment option changes. Over the past year, we've created a best-of-breed streamlined investment menu for the future, with 10 accumulation and 7 pension investment options. And we will continue to work through more streamlined products for sustained returns. Again, I would like to thank our members for your patience as we aligned the investment portfolios, which did cause some disruptions to services. But I'm pleased to say the results can be seen in last year's strong performance that Mark will talk about soon. One of our post-merger enhancements was to introduce the option of auto rebalancing on all accounts. So if you have an account with multiple investment options in it, this feature will bring your investment portfolio back to your original target allocations in line with your risk-return profile after movements in the market. And we initiated that one on the 1st of July this year. Security changes. Like most businesses these days, data breaches continue to be a real risk, and we have systems and checks in place that run 24/7 to minimise that risk. To help protect you, our members, from cyber threats, we've also introduced multi-factor authentication, which means that you have to verify your identity through more than one device to access Member Online and our mobile app. Insurance changes. This year, we chose Zurich as our lead insurer from the 1st of July. They're a motivated and collaborative partner, and we're working on several new products, including discounted travel insurance and access to a new health and wellbeing app. We're looking to launch these next year, and I look forward to telling you all about them when that happens. Our Optimiser members, also known as our former Suncorp Super members, will retain their insurance with TAL. And it's wonderful to have both TAL and Zurich in the room with us today, so please do stop by, pick up some merchandise and speak with them. Annual statements. I also wanted to provide you with an update on your annual statements. If you haven't received it already, we are committed to providing your annual statement by the legislative timeframe of the 31st of December. Following our recent mergers, we've harmonised the systems that produce our statements and have been progressively issuing them to members from September, which will continue up until the end of the calendar year. In the meantime, of course, you can access your latest account details online at any time by logging into Member Online. As you know, we are committed to keeping administration fees low and have already delivered savings of between 20 and 24% to many members, as well as having introduced fee caps. One of the reasons that we can sustain lower fees is because we have consolidated onto a single uplifted technology platform which allows us to be more efficient. Our Chief Technology Officer, Randiki, who is here today, has orchestrated an integrated cloud-based system that is more secure and more functional than we've ever had before. Technology is a key strategy to ensure we can deliver better service to our members by making sure that we're relevant to your needs wherever you are in life right now. The trick, of course, is to use technology well without losing our commitment to having that human connection with you all, which, as John said, is really important. It's a balance that we're genuinely focused on and keen to get right. Our systems are continually being reviewed and upgraded, and there are still some significant projects in the pipeline for next year. Awards are wonderful and are an indication that your fund is striving to be better and to innovate in the industry and achieve sustainable returns. So we are pleased to have been finalists and winners for the following awards and ratings. Money Magazine's 2023 Best Value My Super product in the Best of the Best Awards. Money Magazine's 2023 Best Value Income Protection in Super for Men in the Best of the Best Awards. We achieved the highest ratings by Super Rating, which is Platinum, for the 15th year in a row for our accumulation and our pension investment options for financial year 2023. We were a finalist for the 2023 Super Ratings Momentum and Member Education Awards, and also a finalist for the 2023 Chant West Best Fund Advice Services Award. So really great effort by the team. After a year of extensive change, the focus of the next 12 months will be on cementing our position as a mid-sized industry fund. We'll be focused on ensuring members are benefiting from the recent growth of the fund, particularly those members close to and in retirement, because we know this is the time when members need the most help. We'll continue to be a boutique fund, providing personal services to all our members by streamlining our operations and providing user-friendly ways for you to access our services. You'll start to see more product innovation from us, particularly in the insurance and retirement space. We're working hard to deliver better options in those areas, particularly in the coming year. We will continue to improve our investment option offering, including performance, and look for more opportunities to utilise the increased liquidity that has come from our most recent merger. We're also looking to strengthen our community presence, our governance and our policies, and we've appointed a head of corporate affairs. So there's a lot going on, and I think the team achieved an amazing amount, I have to say. It really has been one of the most exciting years in my career. I know that we are not yet there, and we are challenging ourselves to be boutique, better and brighter for you. So I'll be here later if you'd like to chat, but for now, I'm going to hand over to Mark to give you an investment update. Thank you.
Good afternoon, everyone, and it's a pleasure to be here to talk to you about Brighter Super's investments, your investments. I'll cover 4 areas today. I'll talk about our approach to investments. I'll then go into how does this translate into the investments that your super or pension is invested in. Following that, I'll talk about performance over the short and the longer run. And then I'll have a look at recent economic and market trends. We have a range of investment options for our members, but the bulk of those are in diversified options. Our aim is to grow your super or pension balance while providing consistent returns. Super is a long-term investment, so we look through short-term volatility in markets to generate long-term returns that you need for your retirement. We genuinely diversify portfolios. We embrace investment risk where we believe it will deliver returns. And we also carefully consider fees and costs to ensure value for money. Our focus is on our members, on your best financial interest. We also look for future risks. And for this reason, we are committed to a responsible and sustainable approach to investment and consider environmental, social and governance factors an important component of Brighter Super's investment strategy. So, how are we doing? I think you've already heard a little bit this from John, but I'll dig into it a bit more. I'm pleased to say that in financial year 2023, we saw a very strong performance across our investment options. MySuper returned 10.6% into the year June 23 and 7.1% over 10 years, a real inflation-adjusted return of 4.2%. Our pension default options also had strong annual performance and 10-year returns. The next slide will look at peer relative performance for all of our diversified options. So this slide has all of our MySuper and accumulation choice option performance. But before I start, I have to provide some important disclosures about the tables and the performance information in this. All funds are ranked versus the SR50 or 25 category major funds in the super rating survey, unless indicated by an asterisk, when they are ranked by the relevant all fund comparison. Brighter super returns are reported on the basis of soft close valuations, net of investment manager fees, net of taxes, and gross of member-specific account management fees. And past performance is not a reliable indicator of future performance. In summary, what the slide shows is that in the last financial year, we saw very strong performance across almost all of our investment options. Both Brighter Super, and this was for both Brighter Super, the former LGIA Super and Energy Super members, and Optimiser, the Suncorp Super members. MySuper's 10.6% return puts it fifth out of 50 funds for last financial year in the super rating survey. All up, we had top quartile and top 10 performance for almost all of our diversified options. The pension options had strong performance as well. As I mentioned earlier, superannuation is a long-term investment. This chart shows the payoff from strong long-run returns. Once again, using the MySuper fund as an example, over the past 10 years, MySuper has delivered 7.1% annual return. A 7% annual return means that $10,000 invested 10 years ago has doubled in value. But as the chart shows, it's not without its ups and its downs. And it's important to stay focused on the long-term nature of these investments. So, what do the fund's investments actually look like? The next few slides will illustrate the type of investments that you hold in your super or pension investment. Using the MySuper option, there are 6 broad asset classes that we can bucket investments into. This is the strategic asset allocation of the fund. 60% of the option is in shares, 27% Australia, 33% international. There's 10% in each of property and infrastructure, 15% in fixed income, so government and corporate debt, and finally cash. We alter the mix of assets across the various options. For example, the stable fund is a lower risk fund, and its SAA for shares is only 22%, while the fixed income holding is 45%. We can also break the investments down by country or region where the company is based. This chart shows Australian domicile assets, the ones in blue, are a little over half of the fund, with North America in red, which is larger than the United States, another 33% of the MySuper fund. 84% of the assets are based in 2 countries, Australia and the US. But it's important to keep in mind that this is not necessarily the underlying economic drive of the companies in these 2 markets. For example, BHP is an Australian company, but China is the prime driver of demand for many of its commodities. Looking at the sectors that the equity portfolio, the combined Australian and global equity portfolio, is exposed to, does give you more of a flavour for some of the economic drivers lying behind your investments. In this slide, the pie chart shows the combined share portfolio exposure of the Australian and global portfolio. And this is half of the MySuper fund. Financials, for example, is 19%, is the largest sector exposure. And of course, this is driven by broad economic growth and interest rates. Material and energy stocks, which are another 18%. China is a major consumer of resources, and driving commodity prices. Information technology is 14% of the equity portfolio. And this is somewhat more US-centric and driven by innovation. Healthcare, another 10%, is the next largest and has different drivers to the ones I just went through. And finally, we can go down to the company level. This slide shows some of the equity portfolio's top holdings as a percent of the total MySuper portfolio. I'm sure you've heard, or at least heard, if not know, all of these companies. So looking at Australia, we have, for example, BHP is 2.7% of the MySuper fund. As you know, it's one of the leading global miners. CSL, an Australian biotech, blood plasma, vaccines and anti-venom company, is another 1.5%. We've also got the global investments. Microsoft, as I'm sure you probably know, is a global software and cloud computing company, a world leader, and Amazon, the world's largest online retailer. And it doesn't end there in terms of the diversification. We also have many companies and assets not listed on the stock exchange in Australia and across the world. In Australia, for example, we have investments in the ports of Newcastle and Portland and renewable energy company Tilt. Across the world and in Australia, we have real estate investments. We also invest in one of the UK's leading energy from waste companies, Infinium, and Portugal's wind and solar company, Finergy. And there's a large number of investments across Queensland in a range of sectors. Just to name some: shopping centres, commercial buildings, Gold Coast Light Rail, and a number of airports. And probably most notable is the Sunshine Coast Airport, where your fund is a 50% owner. It makes up approaching 1% of the MySuper option and half of our airport exposure. It has significant future growth potential from route development as tourism, the Olympics and economic growth drive passenger numbers. It also has strong growth potential in non-aeronautical related businesses from its large land bank, which is suitable for commercial use. We also want to make sure that our investments support and contribute to a world where our members can enjoy their retirement. This is why we believe in building a sustainable future under our 4 responsible investment principles. And these are: it must be in the best financial interest of our members. It must have a negligible negative impact on investment risk and returns. It must be genuine in both the intent and its outcomes, and it must not rely on divesting assets. All of our investments are value, not values-based. This means we will not invest in an asset just on ethical grounds. Climate ESG risk more broadly pose future risk to performance and are factors we, along with our investment managers, consider along with traditional risks. Brighter Super continues to contribute to Australia's transition to renewable energy across a number of different assets. Brighter Super has $48 million invested in Tilt Renewables, Australia's largest renewable energy business. The company has 1,314 megawatt capacity across 9 operational assets. In New South Wales, there's Rye Park Wind Farm with a 396 megawatt capacity, and Cooper's Gap Wind Farm in Queensland with a capacity of 453 megawatt. More than 700,000 homes are sustainably powered by Tilt Renewables every year. Another example, the fund also has investments in Waterloo Wind Farm in South Australia. This is with Palisade Investment Partners, and it produces enough electricity to power 59,000 houses. Having a bit of a closer look at Coopers Creek Wind Farm, it's located 250,000, that's a long way. It's located 250 kilometres northwest of Brisbane, near Kuranga North between Dalby and Kingaroy. 123 turbines capable of producing up to 453 megawatts of clean power, power 232,000 average Australian homes. It's the largest operating wind farm in Queensland. Brighter Super's long-term investment in wind and solar power can offer stable returns for members while supporting Australia's energy and creating jobs. Now for the investments on what's going on. When looking at markets, it's still very much about COVID and how it's impacting our economy and our society. COVID brought lockdowns, it brought supply chain disruptions, it brought labour market shortages, massive government support to individuals and to businesses, and the Reserve Bank's 0.1% cash rate from the RBA. Russia's invasion of Ukraine was another shock we faced as commodity prices of energy surged, and we are still working through the process of the distortions from these. These charts show the trends in markets from the beginning of 2020. On the left chart, it shows share markets initially fell sharply at the onset of COVID, before rallying through to late 2021. Shares then fell last year before recovering again, but overall have made little progress relative to early 2022. In the middle chart, government bond yields have surged from the COVID-induced low of 1% or lower to now close to 5%. While all this happened, the AUD, after bouncing out of the COVID slump, has trended down from almost 80 cents down to around 64 cents. After all that, where did this leave the performance of our options? This chart shows asset class performance on the left of the line, and to the right of the line is the performance of the actual options. And this is for the period from January 2022 to October 2023. There's quite a bit there, I'll take you through it. The orange bars are the fiscal year 23 performance, the ones I've spoken about earlier. The grey bars is the actual performance of the fund from January 2022 to October 23, and then the blue bars are for the first 4 months of this financial year. What it shows is that, looking at the MySuper option, overall the MySuper fund returned negative 0.2% in the 22 months of October by October 2023. So while the MySuper fund had strong returns through 2023, this only reversed weakness in the first half of calendar 22 and in the last 4 months. The recovery last year in the MySuper and other options reflected strength in share markets, offsetting weakness in the fixed income asset class and listed real assets. Since January 22, share markets are down for Australian equities, hedged international equities, and only marginally higher for unhedged international equities. And I suppose the key question is, why so much volatility? It comes down to inflation. Australia has returned to... Australia has returned to... Thanks very much. Australia has returned to high inflation. The unemployment rate, the inflation rate is 5.4% at the moment. Inflation the past year has been the highest it's been in 30 years. But we're not on our own. It's not all homegrown. As this chart shows, inflation has a global dimension to it, as you can see that it's tightly linked with what's gone on in the United States, which is the red line. US inflation at 3.7% appears to be leading the way down. The rise in inflation and what it meant for interest rates drove the weak share markets and the volatility I spoke about earlier. The fall in inflation, up until at least recently, has supported the rally back from last year's low. Higher inflation has driven interest rates higher. Central banks around the world have all been on the same path of a rapid rate rise. They missed the inflation surge and so are now been playing catch up. Expectations are that we're getting close to, if not at the peak in many countries. But Australia's official interest rates of 4.3% are at the low end of where global peers are. The US and the UK are actually over 5%. Inflation is starting to slow, but at a slower pace than the RBA would like. Central banks have a bias to hold rates high for longer to ensure inflation heads sustainably back towards 2%. What happens to the unemployment rate will be central to what happens next on rates at home and abroad. This chart shows that unemployment in the United States and in Australia is at its lowest level in 50 years. Lead indicators suggest it will move higher in both countries, but it's still early days. The slowing to date in inflation has been in goods prices, not in services. Funflation is a term used to describe some of this, as people look for experiences such as overseas travel. High wages inflation has supported the pickup. Higher services inflation has been supported by a pickup in wages growth, and the low level of unemployment is an important driver of this. And it is this that very much has the focus of the RBA and central banks overseas when setting interest rates. The Australian and global economy have surprised in terms of their resilience. One of the factors which has been supporting this has been a savings buffer of households. This chart shows the US and Australian household savings rate. The vertical line is just before COVID-19, and to the right is after COVID-19. What's evident is that during COVID-19, savings surged. A good deal of the COVID-19 stimulus from the government was saved. Now it's being run down. This provides some help to explain the resilience we've seen in economies up to this point. But there is a limit to how long this can go on. This too has been closely watched by markets and by central banks. So where does this leave us? There are three key scenarios we can consider going ahead. There's a so-called soft landing, where despite the increase in rates, the economy slows but avoids a recession, i.e. unemployment rate drifts up only a little. Inflation continues to decline, and this is the best we can hope for. There is also a hard landing of the economy and market. Inflation eventually declines, but only after central banks hold rates high for longer and interest rates bite hard, resulting in a recession. Not a great outcome, but lower inflation enables central banks to cut rates, and this will support the share market in time. The third scenario is that of stagflation. Simultaneous high inflation and unemployment, the worst of both worlds. This may come from the central banks easing too early. I lean more towards the harder landing scenario. I believe the lagged impact of rate hikes is still yet to fully show in the economy, and that central banks will err on the side of holding rates, if anything, too high for a little too long. So, in conclusion, over the past financial year, the Brighter Super investment options performance has been strong as the fund grew on the back of the mergers. This has all taken place during a challenging time in economies and markets as we undertake transition to a higher interest rate and inflation environment. And it's not over. We're still working through the distortions caused by COVID-19. While I believe interest rates are close to a peak, the key question is how long will rates remain at a high level? Central banks, I believe, have a bias to hold rates high for longer, given still heightened inflationary pressures. For the economy and financial markets, this poses a clear risk. Central banks are still walking a tightrope, a balancing act between inflation and between recession. Their success here will be critical for investment returns in the year ahead. At Brighter Super, we build your portfolios with diversification and selective asset management to help you navigate these uncertain times, to help you build and protect your retirement nest egg. Thanks for listening to my presentation today.
Thank you very much, Mark and Kate and John. And we move now to question time. We will open to the floor, and just a reminder that we have each of our presenters today able and available to answer your questions. Now, we've received a large number of questions prior to today's session, and we greatly appreciate the interest from members. We may not get to all your questions today, but we will respond to your question in the near future. Also, if your question relates more specifically to your own circumstances, your personal circumstances, or how your super account works, then we would suggest perhaps talking one-on-one to one of our team members that's here today to provide a more detailed response, and also, obviously, you're having a private conversation around that as well. Time's limited today, and I apologise if we don't cover off on everyone's questions in the time allowed, but we will aim to answer one question per member. But if we can't respond to your question within 2 or 3 minutes, we'll follow up with you personally at the conclusion of the meeting. So if you do have a question, please raise your hand and wait for a member of the team to bring a microphone to you. And while we do that, so if there's a question in the room, if we could have a hand up, that's great. If there are no questions in the room, then we're at refreshments nice and early before the storm arrives here in central Brisbane, which I understand is something we can bank on, Mark, for today. So to kick things off, we have a pre-submitted question for you, Mark, and I'm sure the person or people that submitted this question are not alone, and many people will be wanting to know, why has my super been losing money lately?
I think reflecting on what I talked about during my presentation, what's really been driving whether markets go up or go down comes down to around what's going on in terms of inflation, what does it mean for central bank interest rates, and therefore all the risk around economic growth. So when we look at what played out so far this financial year, what we've actually seen is that as inflation started to look a bit stubborn, central banks hiked and gave the impression of rates staying high for longer. The market's actually driven interest rates up, long-term interest rates to reflect that. So it's really about that dynamic between inflation and between growth and what it actually means for whether you're looking at a bond market or whether you're actually looking at share markets, which is really the key driver of those negative returns we've seen.
And John gave us, I guess, a pretty good idea of how super's changed over time with the super guarantee coming in 30 years ago. And I guess this is why we don't, chop and change. We hold the line and, we ride out the difficult times and make the most of the good times.
As I said during my talk, super is a long-term investment, and you can have a look what's happened over the last few weeks. Markets declined, and then data came out overnight, and US inflation was a bit better, and it bounced. So markets can over the long run go up, and it pays to remain invested.
All right, thank you very much for that. A pre-submitted question for you, Kate. Can we get a dashboard to show the performance of the funds along the lines of the one that was previously available with Energy Super, please?
Yes, great question, and thank you very much for asking it. I can confirm that we listened to your feedback and we have added the performance graphs back onto the website. Obviously, as a boutique superannuation fund, our focus is on providing you with investment options that deliver solid, ongoing returns, and we do know how important that graph was to helping you track how the various investment options were going. So it can be found on the website under the Investments tab. I've checked it out, actually. It's quite an interesting graph. Definitely recommend that you go and have a look at it. We do appreciate your patience as we took the time to restore that functionality onto the website.
Very good, thank you for that. Another one for you, Mark. Very timely, in fact. I think you touched on the situation in Ukraine, but also, of course, how will a possible deterioration in what's going on in the Middle East affect our super, perhaps?
Every time that there's unsettled period in the Middle East, the concerns move to oil prices, and particularly around oil's used in everything these days, even though we've been increasing the amount that we do use, and particularly in the current environment with the risk that poses for inflation, therefore interest rates, to growth, to go back to the main drivers of concern there. That is the risk. At the moment, though, the oil price, after initially rising, has sort of settled back a bit. So there's still, the risk is there of the conflict broadening, but at the moment, it's probably more of not much higher oil prices, but more just still there's a general uncertainty there.
So what are you looking for in your role, just in terms of what's happening in the Middle East?
I think the lesson actually from looking at the way what happens is that most of the time the economies get through these situations, that oil prices might be elevated and they come back, but it's a continuation of not just investing on that, it's continuing on the investment fundamentals that we look and see around and what our managers actually see. So it's like everything not reacting too much to one thing, but it's one of those risks. The world is becoming a bit more unstable.
Yeah, okay. Just a reminder, if you are here in the room and have a question, please put your hand up and we'll get a microphone to you in just a moment and we'll get to your question as well. Kate, another pre-submitted question for you. Did Brighter Super contribute to the Yes campaign, either by donation or by in-kind?
Thanks for the question. It's actually a question I've been asked a couple of times as I've travelled around Queensland. So the board of Brighter Super did undertake a conversation, did consider whether or not it made sense for the fund to have a position with respect to the recent referendum. Ultimately, the board did make the determination that we would not contribute to or support either the Yes or the No campaign, because the board were absolutely of the view that the matter was a private one and that we respect the right of each individual member to make your own mind up with respect to the decision that reflects your own view. So no, we did not support either
campaign. All right, thank you very much. We're going to go to our first question from the floor down the back of the room there. Good afternoon.
Good afternoon. Yes, so I understand we have investment in wind farm in Queensland, near Kilkerrow, somewhere near there. So what is the return of this investment so far?
Question for you, I think, Mark, on the wind farm.
Look, I don't, the actual investment return by actual wind farm, I don't actually have. We normally have these investments with the manager. We invest in an overall sort of platform of these wind farms, but I don't have it. But we can always find out more information. But it's not something which I have available at the moment.
A hot, dry summer, I would think, which is well and truly on the cards, is the sort of thing that would perhaps drive a strong return on that investment early on?
Well, I think the key thing about when looking at wind farms, they're about actually, it's a steady, stable return that we were looking to actually get from those type of investments. We've got around 300 million invested in renewable energy in the portfolio, and a significant amount of those are actually wind farms.
I think the most important point to make is that with respect to any of our investments that are part of the sort of ESG family, environmental, social and governance family of investments, Mark did go through our 4 important sort of principles of investing, and the first one of those was that it did have to be in members' best financial interest. That is our overriding objective as we make these allocations. And so, the investment in the wind farm is primarily about making money for you, and it's wonderful that we're able to support the energy transition as we're doing that.
Thank you very much for that, and thank you for the question. If you have a question, please put your hand up and we'll get to you in a moment. But Mark, a pre-submitted question for you. And again, it comes to, Kate mentioning ESG. There's something that is very much a bit of a buzzword around investment at the moment. You might run from the room as I mention this, though. With crypto coming into the environment, what's Brighter Super's stance on offering this to its members?
Look, our stance at the moment is not to offer it to members and build it in the portfolio. For us, a central part of our investment philosophy is about valuing. You want to understand the investment and you want to be able to put some type of estimate on it. And that generally comes from you've got cash flows related to an underlying asset. That's not the case with crypto. And so that fundamental sense, for us, it's not an asset that we want to invest in. We just don't want to speculate on that. And there's another aspect you can look at it as well, is does it bring true diversification to the portfolio? Relative to some of the expectations, it seems to be behaving in a cyclical sense like the share market. So on both counts, we just think it's, at the moment, best to stay away.
So would that be a typical stance from most Australian super funds, do you think?
I think it will be. I think there has been some nibbling around the edges in strategies, but there isn't any large wholesale investment, no.
All right, we'll leave it to the young blokes that go to my gym to do the crypto investing. Over here, another question. Good afternoon to you.
Hello. I noticed that the SR fund didn't do any near as well as the other funds, and I just wondered if you could explain why, compared to the very good performance on all the other funds, this one was well down the pack.
Yep. The main difference between the SR fund and the other options is to do with the equities part of the portfolio, where there are significant negative screens in that portfolio, reducing, including most importantly for this, energy investments. And so the trends we've had in oil prices, particularly the initial phase to do with the Ukraine war, that drove very strong energy demand across the whole complex, oil, gas, and the like. And it's that part which the SR option has missed out on. That's the main story there.
Thank you very much, and thank you for the question. Down the back of the room again. Good afternoon.
Good afternoon. I just want to ask that in terms of public housing, would that be a way for the government and the business to make it less volatile when we have those things like the wars and the other issues? Would it have some good thing for our kind of companies?
So a question about public housing, perhaps, Mark? Thank
Yeah.
you. Thank you.
I think when probably what you're talking about there, like it comes under the various names: affordable housing, social housing. The issue we have around and the approach up until now, and it's beginning to change, has been that if it's going to be affordable, that generally means it's going to be lower than market rent. And as we said in our responsible investment principles, that we're not looking to give return up. What we are beginning to see, and we are looking into at the moment, is that there are different structures, but it can be where the government will actually provide a payment for making a property available. So to date, it's all been about the returns. Yes, it's true there can be some. It would be a relatively steady type of return, but to date, the investment returns haven't been attractive. But given the issue which has been raised and talked about, things are changing. Governments are getting more involved, and it's something that we'll be having a look at.
Very nice, thank you, and thank you for the question. Again, please, if you have one, pop your hand up and we'll get to you in a moment. I'm going to take another pre-submitted question around ethical investments and how will they be developing in the context of climate change, please, Mark.
So in terms of ethical investment, in my presentation I ran through, you probably got a bit of a sense there what we're doing about climate change, and that is actually moving our portfolio where the investment returns are appropriate towards renewable energy. We want you to be living in a world and to enjoy it, and I suppose you could say part of that is for the climate to be good, and we want that to be the case. What we're able to do is, with investments we're increasingly starting to invest in, is to be able to do that, but to get the type of return that we actually need to justify putting in the portfolio and to be in your best financial interest. So our approach on sort of around climate change is to actually invest in renewable projects. And at the moment, you saw about Cooper's Gap. We're also looking at other opportunities in Queensland as well to actually try and be part of the big move that the government is driving here in Queensland.
Thank you very much, and thanks to the person who pre-submitted that question. Do we have any more questions from the floor? Ben, can we get a microphone down the front here, please? Gentleman right down the front. Just here. Thank you very much, sir. Good afternoon. Thanks, Ben.
Norm Craswell's my name.
It's on, Norm. Off you go. If you'd hold it up a bit closer, sir, if you would, please. Thank you very much.
What I was looking at during the year was how to, if I could swap between, I'm in conservative balanced, if I could swap between index balanced, conservative balanced and balanced, whichever one was going the best for a month, and then swap back. But I noticed that the unit prices for each of those is very different. So the question I'd ask is, well, A, can you do that? And B, how do you work out the unit prices?
Very good. Thank you for the question.
Oh,
Mark.
I'll answer that
You want to try?
if you like, yeah. So the unit prices are struck for each individual investment option as an index, effectively, of how the assets in that investment option move day by day. So because they weren't all started on the same day, and because they haven't all had the same price trajectory, they don't all have the same unit prices. What you have, though, within each one of your investment options is a balance, that is a total number of dollars, and that is represented by a certain number of units at the unit price in that. When you switch, you're effectively able to take that balance and transition it across into another investment option, and they effectively use the new unit price to work out how many units you've got in the new one. So the unit prices, it doesn't matter if the unit prices are different. The main thing is that you're able to switch your balance as you go from one investment option to another. And yes, we're very comfortable and support investment switching. And
are there any provisions or conditions, limits perhaps, around how frequently you can move from one to the other?
I don't think we do anymore. No, we don't. We did used to have that, but for some period of time we have enabled reasonably frequent switching. So if you think that that is something that will be of interest to you, go ahead.
All right, thank you very much. And we'll move on, but if you'd like to continue the conversation when we conclude, I'm sure Kate and Mark, I'll stand at one end of the stage, sir, and keep the three of them for you if that would be of any assistance to you. Do we have any more questions from the floor here in the Brisbane room? I have one last pre-prepared question, and we'll go to you, Kate, please. What services are you providing to Suncorp members that are now with Brighter Super, and how is it different to other super funds, please?
Yeah, thanks very much. So we are really delighted to be able to offer the full range of services that we offer across the entire fund to all of the members from each one of our cohorts of membership. So since the former Suncorp Super members have joined Brighter Super, they have been able to access, for example, our single issue advice offering, which is available without additional charge as part of the cost of the administration fee. And that is where, I think we spoke about it before, that's where you're able to go and have personal advice on an issue that is a single issue that is relating to superannuation. We also offer super health checks, which is a new thing, I think, for those who've come from Suncorp Super. We have a booth over in the corner here, and we have a range of really wonderful team members in the room here today who'd love to talk to you if you're interested in it. It's a 30-minute meeting to look at your circumstances, work out what is the best thing for you to be thinking about next, and potentially whether there's more advice that is of use to you. Of course, we offer to all the Suncorp Super members our invitation to things like today, to our seminars around Queensland. We have around over 40 people actually who are face-to-face working around Queensland who would love to talk to any of our Suncorp Super members as well as our Brighter Super members. And that is pretty significant investment when you compare it to other funds. So there's a whole range of services. We've got webinars, we've got the bite-sized education webinars we spoke about earlier, which have been really incredibly popular. There's a lot of information available on the web through some education modules. So all of it that has always been available to the Brighter Super members is now available to every one of our Suncorp Super members as well.
Wonderful, thank you very much. It's just occurred to me that every question went to Kate and Mark. So, John, my apologies to you for giving you an easy time of it this afternoon. That is the end of proceedings here today. So please remember that our executive leadership team and the chair, of course, will be able to conduct a conversation and answer your questions afterwards. For those who've pre-submitted a question or asked one online today, rest assured the team will be in contact with you in coming weeks. So we thank you, our members, for attending our 2023 annual members meeting. We'll have today's video and minutes of the meeting available on the website in coming weeks. Please don't forget to take a moment to complete the feedback form which is on your chair, so we can make this the best possible use of your time as we go forward. And also, of course, you can collect a copy of the 2022-2023 annual report before you leave. Now, for those online, the annual reports are now available on the Brighter Super website, or you can find that by selecting the Handouts tab to download your own copy of the report. And in the Handouts tab, you'll also find the feedback form inclusive of an opportunity for you to be contacted by a member of the team. We greatly value, of course, your feedback as we do with those people here in the room. For those interested, we have staff on hand to offer super health checks, as well as members of our advice team to help you with any questions you may have. And I invite you to join us for some light refreshments here and some light refreshments at home or at work if you are playing the home game today. Thank you very much for joining us online and here in the room, and a very good afternoon.